Stock futures are facing a slight dip as concerns about regional banks' loan practices fuel market uncertainty. This comes after a sell-off in the previous session, leaving investors on edge. The story behind the numbers. Let's dive into the details. Futures tied to the Dow Jones Industrial Average slipped by 102 points, a modest 0.2% decline. SP and Nasdaq futures followed suit, dropping more than 0.3%. In after-hours trading, Interactive Brokers Group and Oracle experienced losses despite reporting strong quarterly results. Drug makers Eli Lilly and Novo Nordisk also saw their shares move lower, potentially due to President Trump's comments on fertility treatments and drug pricing. Each of the major U.S. stock indexes closed in negative territory on Wednesday, with the Dow, SP 500, and Nasdaq Composite all ending the day in the red. The decline was largely driven by a significant drop in bank stocks late in the session, the banking sector's woes. The uneasiness in the banking sector stems from the disclosure of bad loans by Zions and Western Alliance, sparking worries about loose lending practices. The SPDR-SP Regional Banking ETF, which has been on a downward trend for 4 consecutive weeks, lost more than 6% during the session. This comes amidst a backdrop of recent bankruptcies in the auto industry, further fueling concerns. Volatility and safe havens. Wednesday also saw a jump in the Seco Volatility Index, often referred to as Wall Street's fear gauge. This was accompanied by a decline in Treasury yields and the US dollar. On the other hand, gold prices rose to new records, indicating a continued interest in safe haven assets amid widespread uncertainty. Liz Ann Saunders, chief investment strategist at Charles Schwab, commented on CNBC's Closing Bell that these banking concerns arise amidst a speculative environment in the public market. Investors have been chasing riskier stocks, such as those in quantum computing, drones, and unprofitable tech sectors. When speculative froth meets a potential bigger picture issue, it can lead to increased volatility, she explained. Most of this speculative activity is not concentrated in mega-cap names, but rather in smaller market segments like the Russell 2000 Index, which hit a fresh high on Wednesday. Ongoing market concerns, tensions surrounding global trade, tariff policies, and the artificial intelligence boom continue to persist. Additionally, the ongoing U.S. government shutdown, now in its 3rd week, has halted the release of crucial economic data from federal agencies indefinitely. Despite these concerns, the SP 500 is up nearly 1.2% this week, supported by a strong start to the 3rd quarter earnings season. The Dow Jones Industrial Average and Nasdaq Composite have also gained about 1% and 1.6%, respectively, week to date. After-hours movers Novo Nordisk, Interactive Brokers, and CSX Corporation were among the stocks making moves in after-hours trading. CSX shares jumped 2% on strong quarterly results, while Interactive Brokers and Oracle experienced declines despite reporting beats on earnings and revenue. For a full list of after-hours movers, check out the link provided. And this is where it gets interesting. With market sentiment shifting, how will these regional bank concerns impact the broader market? Will the speculative environment persist, or will investors seek safer havens? Share your thoughts in the comments below.